Okay, good morning, everybody, and welcome to the Gulf Intelligence Daily Energy Market Forum, where every morning we take stock of where the markets are opening in Asia and what the outlook for the rest of the day may be. Let's kick off in Asia, where we're joined by Kevin Wright, the Asia Pacific analyst with Kpler. Kevin, good morning. Prices just keep moving upwards. Certainly, they seem to have good reason this morning with the deep freeze in the US.
Yes, good morning, Sean. It sounds a bit cliche, but we've got the perfect storm, haven't we? We've got obviously massive pressure on US refining and therefore outages. We've got a spike on product cracks off the back of that, and at the same time, we've had an earthquake in North Asia that's affected 20% of Japanese refining output. So we've got a very interesting situation, and for once, crude is being led by products rather than the other way around. I think we've seen over the last year the massive destruction of demand for gasoline and jet in particular, but also diesel. And as a result, we've had a sort of a crude supply-demand balance that's dictated prices. But all of a sudden, with those refinery outages, I think products are potentially in line to sort of give a little bit of a fillip, a little bit of a boost to the crude market.
Let's move to India, where we're joined this morning by Narendra Taneja, India's leading energy expert. Narendra, there's kind of the good cop or the bad cop, the good story and the bad story in India. We're seeing the Sensex reach another record above 50,000 this week. That's supposedly a good story. But at the same token, we're seeing petrol, gasoline prices at the pump reaching a record as well, which of course is quite painful for consumers in India. What's the outlook there at the moment, do you think, on these two things coexisting? And Narendra, I think you need to unmute as well.
Yeah, the outlook at Sensex basically it looks very good because the overall projections for the next year, next fiscal, which starts on the 1st of April, are very good. I mean, there are projections that Indian GDP may rise by about 9 to 11%, depends on which projections one is looking at. And at the same time, overall sentiments around the country are very good. And life is more or less back to normal, like in Delhi, is more or less back to normal. I think it's all basically manifesting and reflecting in terms of what you see at Sensex and what you also see at FDI figures. Yes, they are at the same time, crude oil prices going up puts government in a little bit uncomfortable position. Consumers also a little bit in an uncomfortable position because they want to consume more, they want to go out, they want to buy more oil and petrol and diesel and turbine fuel and everything. At the same time, the taxes are so high, so the prices are high because the federal taxes on petrol, diesel, turbine fuel, LPG are very high, and so are the state taxes. As you know, we are a federal structure, and different states have their own tax regimes when it comes to petrol, diesel, and the fuels. So the result is that today you end up, the ordinary consumer ends up paying roughly 60 to 65% money that it pays going for taxes and on taxes both by center and state. So that's in the process, it brings a bad name to the government, and consumers are getting a little bit restless. But at the same time, they're happy because the demand is going up and the economy is opening up.
But surely these two things cannot continue to coexist. At some point, the energy prices will curtail economic recovery.
Yes, there is a point, but at the same time, my impression is the government at the moment for the next 2-3 months is going to focus more on a stimulus which they have offered, and at the same time target more kind of the underprivileged sections of the society, and also neglected sections of the Indian economy like agriculture and so on and so forth. So overall economics, I think, is going to be like this. So prices probably are not. I don't see any big changes in terms of retail prices, and a significant change in 3 months. But after that, I think government would be in a better position to cut taxes, both the federal government and the state government. At the same time, it will depend how the crude oil prices go. If they stay in the region where they are, I think probably both federal government and the state governments will offer some kind of cuts in taxes, and that will give some relief to the ordinary consumer, and also would be a good news for the economy overall.
Well, I remember not so long ago an old friend of mine, energy minister in the OPEC, saying to me that when consuming countries were complaining about gasoline prices, crude prices, he said, well, we'd be happy to sell it you for free if you give us half of your taxes. And that might be sort of part of the problem. But let's bring in Ed Bell, Senior Director, Market Economics from Emirates MBD. Ed, welcome back to the table. OPEC must be a little bit confused, I'd say, about what to do next.
Yeah, I think the signals that we're getting, at least this week, with respect to the price reaction to the storm we're seeing in the United States, I would hope that the OPEC Plus ministers will be looking through that. But putting that to one side, I think overall the conditions around the oil market and commodity markets generally are pretty positive as we go forward. I mean, the rates of vaccination that we're seeing in some key markets are starting to pick up at a decent level. Yeah, there are still big countries that are still lagging behind, but you can pretty clearly see that this is a pace that's only going to accelerate down the road, and maybe that recovery holds a bit longer until the second half of the year for it to really get some legs. But nevertheless, I think the outlook economic-wise is pretty positive globally. As Narendra mentioned, we're expecting to see a big bounce back in India's economy this year, and that's something that we're really expecting to see paralleled across most major economies. And by and large, that's going to be a good number or good outcome for oil demand going forward.
Kevin, are we lucky in a way? I don't know, given the outages of the last few days and this week, that it's coinciding also with the China Lunar New Year, where demand is a little bit depressed, given the fact that the money, hundreds of millions that would normally travel, are at home and not traveling.
I don't know if it's lucky, but it's a very interesting phenomenon this year. As we all know, the world's largest migratory event, and suddenly the transportation demand has been down by 70% or so year on year, certainly from a rail perspective. So it's been a really strong response, if you like, to a relatively limited amount of cases in northeastern China. But I think it was necessary for the government to do that. I think they've been actually surprised by the level of adherence, by the level of compliance with the newly imposed restriction. It's sort of coming back to the point I made a few moments ago about product cracks. It's an interesting situation because obviously product cracks have been very depressed over the last year, and yet because of what we're seeing in Europe, in the States, and in East Asia or North Asia as well, product cracks all of a sudden look a little bit stronger. So maybe we're getting to that stage of seeing a little bit of a recovery in the market. Narendra made the point a moment ago, and I think it's very valid, that an awful lot of retail gasoline and diesel prices is actually taxed. Well, that's the same in most of the Western world as well. But the fundamental point here is Indian demand is also recovering. Even as far back as last October, it was growing year on year. So that's creating a much more constructive picture, perhaps, than we've seen in a while.
Narendra, as OPEC Plus sits in their consideration as to what to do next, I know that in this region, of course, there was a lot of plaudits for Saudi Arabia for cutting an extra 1 million barrels a day and pushing prices up to these levels. But of course, for a consuming country like India, that is not the most appreciated thing in the world. OPEC sitting now at the table in April or in a few weeks' time to consider their next steps. Would you express some caution that not to put too much pressure on the consuming nations at this sensitive time?
Well, very good point. You see, in fact, India bilaterally to Saudi Arabia and to Russia, and also at the G20 platform, has already raised this issue. If the prices go beyond a certain point, let's say beyond 65 on a sustained basis, a bad news for the oil producers. Because if you go by OPEC projections or the recent projection of International Energy Agency, I mean, in India, 2019, that's before pandemic, were consuming 5 million barrels a day. And projections are that over the next 20 years, India is going to lead the market, not China. India is going to lead it, and the projections are India's demand is going to be in the region of 9 million barrels a day. So if OPEC should also, share this picture and try to be part of this story, then also you had otherwise countries like India in particular would be start in, investing even more in renewable energy, and that may not be a good news for them. So this being conveyed to OPEC, to Saudi Arabia in particular, that that they should actually be cooperating in the sense so that India is not compelled to spend even more money, more than India actually wants to at this stage in renewables. If there is no or atomic power, so that's consultations are going on, and OPEC has given the promise. Saudi Arabia and Russia, they've both given the promise that they are looking into it very seriously. In fact, the recent development is that Saudi Arabia and India are actually deepening their relationship in the field of oil. And Saudi Arabia has once again conveyed to India, you don't need to worry about oil because your oil tanks are physically maybe located in Saudi Arabia, but they are for you. It's good, but point is this needs to be converted in reality, and that's why
they've obviously got some good PR companies working for them. That's a nice story. Ed, we saw in the Emirates MBD banknote this morning the report on the traffic at the Dubai airport for 2020. In your report today, you're telling us that it was down 70% in 2020. My question really is, where does it go from here? A lot of this oil market recovery for 2021, and certainly on the demand side, is built on a recovery of jet fuel. Where's the bank's views on that? Where does Dubai Airport look at it for the future in 2021?
Yeah, I think the decline that we saw in the activity at the Dubai airport was largely in line with international trends. So I don't think that we are necessarily an underperformer in terms of overall aviation trends. I think this year...
But we are at the receiving end of particularly long haul, which is the one that is very specifically at the sort of knife edge of this crisis.
Sure. I think for us, though, the expectation is that probably most of Q1, we don't see much of a bounce back or activity wise. Second quarter is really, well, maybe we'd start to see those green shoots, but a much more strong recovery in the second half of the year. So that would help to support the domestic economy, and presumably you would see a better bid for jet prices toward the second half of the year. I think the question will be interesting as to if the kind of activity that we're seeing in the product markets right now can extend going forward, and that it does incentivize some more buying activity over the next couple of months. But largely, yeah, I think it's really down to H2 2021 kind of story for us, where we see most of the recovery happening.
Otherwise, Kevin, in Asia, the demand recovery, again, the outlook there is that many countries are in a post-COVID demand levels, that they're already getting back there. Where is that outlook in the immediate aftermath of the sort of Lunar New Year? Should we expect the Chinese to get back to a more aggressive buying spree at these prices?
It's always something that we look at Kpler. Chinese crude flows, and Chinese crude flows in February look like something around the 12.5 to 13 million barrels a day level, which is fine. Just to put that into context, January was also high at around 10.7 million barrels a day, and March is currently looking at around about the 10. So February looks like a bit of a return to form. Now it's worth caveating that number with the fact that the Chinese system is so full, the inventories are so high that they actually can't take all of that crude in. So the 13 or so that we're seeing for February will roll over into March, right? So some of that will come down. And that suggests to me that, we're still seeing strong Chinese demand. The rest of the region is hard to say. I think Vietnam is facing some difficulties at the moment. They had a very good response to the pandemic early last year, closed down, and then recovered into the second quarter really in terms of gasoline and diesel demand. But there have been outbreaks in the north. And I think that also, obviously, coinciding with the Lunar New Year, has created considerable concern there that that we could see more cases, and therefore we'll see restrictions being reimposed. And that's going to be the case across the region. Malaysia also struggling, as we know, and has been for a number of months now. So I was just going to say, so the post-New Year story isn't quite as bullish as perhaps it could be in some of the other countries around the region.
Right. Narendra, one of the stories that have been sort of making continuous noise. And again, today, as we're seeing the cracks improving because of this storm, etc., in the US. But ultimately, the general narrative for 2021 is that the market is oversaturated in refining capacity, and we're going to have to see some refineries close. Now, do you think that's something that India is cognizant of, that India needs to participate in, or is the sort of shut in of current refining capacity going to have to come from the West? What's your view on that?
Well, my take is, as far that as far as India is concerned, as you know, India is a major product of products, and so I have heard already that some couple of refineries that they're planning to basically rework their plan if they can postpone a little bit their maintenance plans. As you know, these things are planned quite in advance and also communicated to the buyers. But given the situation, I've heard that they are planning to rework if they can do it, and probably we will know that very soon. But at the same time, India's focus continues to be on product market. India playing a major role as an exporter of products, and therefore, I just want to also mention that there are now a serious progress in terms of the two big refineries which have been under discussions and also one under construction, and there are even plans now to go for one more, so that India continue to maintain its role as a leader in terms of products, especially for markets in Asia, Africa, and Latin America, and the Middle East also. But I just want to bring one point quickly, if you allow me 30 seconds. While we are looking
Please.
at this picture, let's not forget at the same time major development which is happening, where you see that Middle Eastern countries, in consultations with India, in consultation with the United States, they are reworking their plans in terms of how to look at next 20 years, where India is going to be a major player as a buyer of crude oil, which means that you will see a deepening of strategic ties between oil producers of the Middle East, the United States, and India. And that's a kind of new alliance, which is business alliance, which is emerging, which of course has got its own geopolitical dimensions too. But it's something, as India emerges as probably the biggest player in the oil market. So these are very interesting developments, and you will see some very strong movement in their direction already by the second half of this year.
Well, there has been commentary, and the FT over the weekend joined the chorus of this commodity super cycle coming back that we saw 10 years ago, but then it was essentially built on China demand. The next commodity super cycle, if indeed it does manifest itself, one would think is dependent on India rising and becoming over a certain decade or more into the China scale of consumption. What's your view on that as the concept of a super cycle and India's role in driving it?
Well, you see, the one thing is very clear that when you look at energy transition in India, the energy transition is happening, will continue to happen, but oil as a major boy, as a big boy in the India's energy mix, is not going to change significantly for next 15 to 18 or 20 years. And so on, and the gas role is only going to rise, and even the coal will continues to be very much there, while renewables, because the simple reasoning for that is that we have got about 1 billion people out of 1.36 billion people who are still kind of energy poor, in the sense they are not able to consume as much energy as they would like to, and that includes actually most particularly oil. Which means while we go for renewables in a big way and we lead the renewable revolution in the country, but that is not happening at the cost of oil. So that means India will continue to build more refineries, continue to build more retail network, invest more in exploration production, also at the same time build alliances with countries like UAE and Saudi Arabia and other countries at the same time. So it's a very, very different story from India. That's what basically will lead to the kind of situation where India will be leading.
Given India's outlook, an appetite for more oil, the capex cuts we saw last year, Ed Bell, that those capex cuts are going to have a significant impact on supply, and maybe in the medium term, it's not this year's problem. But is the Gulf and the Middle East able to sort of pick up that slack, do you think? And are we seeing the necessary investment in new supply in the Gulf with that outlook for the midterm?
Well, honestly, when we look at capex and some countries, especially even the NOCs, they slash their capex. That's an area of worry for us, and that's being studied very, very carefully, not country by country, but company by company. And that's an area of worry, and we see a lot of problems due to that between 2022 and 2024. And so
Let me
India is
just bring in
already
Ed on that point. Ed, your views on that in terms of the investment in the Middle East, meeting that midterm demand, and at some point, does it also add to the upward pressure we're seeing on prices?
Well, I think that that's been a long-term strategy of the Gulf NOCs. I mean, ADNOC's target of hitting 5 million barrels, but 5 million barrel a day of capacity by 2030, that's been in place for a long time. We had an announcement toward the end of last year that they're committed to spending 140 billion dollars on production capacity in oil and gas over the next couple of years. So I think that there is very much a commitment or an appreciation that the Gulf region can be the gap filler, so to speak, in the sort of 2025 to 2030 kind of time frame in terms of meeting that demand, particularly as capex in, I guess, your sort of legacy producing regions is going to be more constrained by factors that we're not really burdened by here in the region. So we're not really seeing, solid pressure from investors, for instance, to divest away from oil and gas fixated on producers in the Gulf region that you might see, say, in the North Sea or across the United States or Canada. So I think very much the strategy that we've seen for increasing capacity, those numbers have been on the wall, I think, for Gulf producers for a long time, and they're taking advantage of it.
Ed, I wanted to get your opinion also on the other story on the digest today, which was the news overnight from Saudi Arabia's finance minister basically putting out a warning that all international companies that don't have their Middle East headquarters in Riyadh from 2024 can expect that they will not receive any government business. That's obviously a big issue for Dubai, which is currently the regional hub. What's your take on that news?
Yeah, I think it is a big challenge for the USP, let's say, of Dubai going forward. I mean, already I think you're seeing more and more firms build up their foothold in Saudi Arabia as the economy opens up further and there are more opportunities. But to put it out so sort of bluntly that, you will not be receiving business if you do not have your regional headquarters in the kingdom is, a strong step. We've seen similar kind of moves in other countries in the past where you want to make sure that capital is invested in the country that's going to be receiving the share of the work, or that you potentially have kind of technology or staff transfers as well. So I'm not sure it's necessarily the most open and welcoming message that you want to be sending out to international firms, that if you want to do business, you have to agree to commit to the kind of level of investment that the kingdom is outlining at the moment. And I think there's also a big question about enforceability. What does a regional headquarters constitute? Is that an office with 10 people, or is that an office with 200 to 300 people? So if you just have a small office there and people still shuffling in from the rest of the region, it may not be as impactful in terms of the outlook for Dubai or these other sort of commercial.
Yeah. I suppose the timing is also one of concern, given that as we come out of COVID, a lot of companies will be reevaluating future policies, and that certainly will be one they'll have to put into their considerations now that it has been announced. Let's go to the survey question for getting the rest of the room's view on the outlook going ahead. How much oil should OPEC Plus increase supply by in April? I suppose if India had it, it would be 2 million barrels per day, and something that really puts a downward pressure on the oil price. But the question to the room is how much oil should OPEC Plus increase supply by in April? Not what you think they will do, but what do you think they should do? None, 1 million barrels per day, 2 million barrels per day. Welcome everybody's view on that, and we go around the table for some closing thoughts. Kevin, the outlook for the week, the rest of the week, clearly it's been a very strong start for all sorts of reasons, but ultimately one would have to say the fundamentals underpinning the oil market are looking pretty solid.
Yeah, I think so. And I think, going back to the point I made right at the very start, the cold front that's sweeping through the States is clearly going to be very supportive for the next few days. And unless we see a sudden change in that, I don't see that really changing in terms of price action either.
And your outlook for China through the first quarter remains pretty solid near those heightened levels we saw at the end of last year?
Yeah, I think we're going to see, the raised crude imports that I mentioned a few moments ago. I think we're going to see raised refinery output because the Chinese domestic demand is relatively strong. Once we get past the sort of the crowded part of the Lunar New Year. So I think China sort of leads the way for the world's economies to recover.
Narendra, the same, your thoughts, the outlook for the rest of this particular week. Prices continue to rise, extra pressure. You had the farmers annoyed. Now you're going to have the truckers annoyed in India. It always seems like you're faced with somebody's annoyance. That's the great democracy, I suppose, that India is.
Yeah, I mean, is there, but there is no significant kind of impact when it comes to the demand for oil and products. But what is having an impact, I wouldn't say very big one, but is the oil price, the retail prices. I mean, people want to consume more. They want to go out. They want to go out on holidays, and they want to go, to other places. And India is a vast country, but the majority of people, especially the lower middle class, and they're
So
also
what's
big
the current
consumer.
snapshot, Narendra? If you just give us a quick update on the COVID situation, what is the infection rate? What are the mortality rates at the moment?
Well, COVID situation overall is pretty good, except for the states such as Kerala and Maharashtra. Maharashtra, which is, as you know, is a Mumbai is there, which is the commercial capital. There, the situation is under control, but is not very encouraging, and that's a bad news. But except for Maharashtra and parts of Kerala, overall things are almost beginning to get back to normal. New Delhi, where I'm based, is almost back to normal. I mean, the worry is still there, is there very much on the horizon. But I think a vaccine campaign is changing the picture. We are pretty optimistic, but at the same time, keeping our fingers crossed, looking at what people have gone through in western part of the world. So
And
we're
what's
keeping
the
fingers
dominant
crossed.
vaccine that's being used in India, and how big is the campaign?
Well, campaign is pretty big. Like, we have already vaccinated more than 10 million people, and the good advantage that India has over many other countries, that we are also not a big producer, we are a big exporter of vaccines. If you see many parts of the world, India is a major, big exporter of vaccine. So on the one hand, we are vaccinating millions in India practically on daily basis. At the same time, we are exporting millions of vaccines every day to different geographies.
Okay, let's get the survey result and give Ed the last word this morning. How much oil should OPEC increase supply by in April? 1 million barrels per day gets the nod. Ed, your closing thoughts and what you'll be watching for the rest of the week.
Yeah, well, just an interesting question is to, whose perspective are you taking about that supply increase, from the point of view of the producers or consumers. My vote was actually for the 1 million barrels a day, because I think that would help to solidify prices in the sort of $50 to $60 range in the second quarter, which wouldn't probably raise too many alarms for the consuming nations, but also is a decent enough number for most of the OPEC countries. I think one thing worth bearing in mind with the improvement we're seeing in, at least in spot prices, is to put in the context of the bigger move that we're seeing upwards in risk assets, generally a softer dollar. So oil and commodities really being caught up in that. So we'll be watching some of the other indicators out in the market for interest. One will be U.S. wholesale price pressures. We had a little bit of a soft read for January as far as the consumer price index came in, but seeing whether we'll get any feed through in terms of higher prices from the factory prices, essentially, for January as well, whether that's going to feed through later down the line. We don't expect to see much of a boost in inflation really this year, and think the market is probably getting a little bit ahead of itself in terms of overpricing the inflation outlook. But nevertheless, that's what's going to be one of the big variables that we're tracking, at least in the first half of the year.
Okay, well, let's leave it there. I just leaves me to ask Kevin, what are all those dots on the map behind you? I can't handle leaving this call not knowing what those dots are.
That's a snapshot or a screenshot of the Kpler platform. And all of those little dots are, well, the green arrows are loaded vessels, and the orange arrows are ballast vessels. And then the green and orange dots around the coastline are terminal and storage facilities.
All right, well, that's good to know. We should all have one.
Absolutely.
Thank you, Kevin from Singapore. Really appreciate your time today. Narendra from Delhi, thank you so much. And Ed from Dubai, really appreciate your insights and contribution. The 50-odd people that logged in for the call, thank you for your time. We'll catch up with everybody later in the week. All the best.